This is Stephen K. Bannon, the Victory Sessions special edition on Crony Capitalism. KABC 790 AM Talk Radio, Los Angeles, California. Tonight, our Crony Capitalism special featuring my co-host, my in-studio co-host, Peter Schweizer, author of the new book coming out on Tuesday, Throw Them All Out. It's not just a book. It's a book. It'll eventually be a film. It's a movement. Throw Them All Out. Peter, how you doing?
I'm doing great. How are you, Steve?
This book, I think the reason it's attracted people is that it is so comprehensive. It is so broad. So why don't you walk through our audience how you got the idea, what's been the arc of Peter Schweizer that brought us to this moment when this book's coming out and everybody in Washington's running scared from it?
Well, I come from a background of writing on a number of subjects, and I came across this study a couple of years ago that just totally blew me away. And I say that not because I'm a financial analyst, but just because I'm interested in the subject. And it was a study done in an academic journal called the Journal of Quantitative Economics. What they did was they looked at 6,000 stock trades by United States senators.
You were just had a weekend off, and you were hanging around watching football, and you're thumbing through the Journal of Quantitative Economics. Homie, you got to do better. And so you just, this came to your attention, and I take it this was a peer-reviewed quantitative analytics for econometrics. This was no happy talk. This was hardcore math.
Yeah, exactly. And I actually didn't just stumble across the article. I stumbled across a reference to the article and looked at it. And here's what they found. They looked at 6,000 stock trades by United States senators. What they found is that if you look at how various sectors do in investments, the average American underperforms the stock market. The average corporate insider beats the market.
That would be called the mooks, right?
That's right.
They refer to all of us that just trade the stock market as the mooks. Those are the guys that underperform, right?
That's right. The corporate insiders trading their own company's stock beat the market by 5% a year. Hedge funds, the guys that make, $200 million a year or more, managing large amounts of money, they beat the market by 7 to 8% a year. This study found that United States senators beat the market by 12% a year.
So they're up 50% on a percentage basis over the best money managers in the country, which would be the hedge fund. The hedge fund, by the way, would be the 1% that the Occupy Wall Street guys keep pointing at, right? I mean,
exactly.
So they're 7% or 8% above the market. And they're getting premium rents for doing that. Yeah. And here are the United States senators, which if you've looked at most U.S. senators, the first thing it does then come to mind is Gordon Gekko. Right. They're 12% better than the market.
That's right. And so you're faced with this question.
So a light bulb went off.
Yeah, you're faced with this question. Either these guys are just really incredibly smart and we don't appreciate them, or something's afoot.
They may be incredibly smart in what they do, but here is something that's not in their...
Right.
Their mandate is not investing in the stock market.
Right.
Right. And so all of a sudden it just jumps off the page at you. How could guys that don't get paid to do that, the guys that get paid to do it every day, the National Football League, guys playing for money on Sundays, is the hedge fund community.
Yeah.
If those guys are at 7 or 8%, how are guys 50% better than that?
That's exactly right. And what I realized as I started to research is that there's this huge divide in America, and the divide is basically between us and the permanent political class. For anyone in the United States, with the exception of the permanent political class, there is something called insider trading laws that say you cannot trade stock based on inside information. If you work for a company and you know that they're going to have a bad quarterly report and you sell all your shares 3 days before, when the SEC, if they see that pattern of trading, they're going to come knocking on the door, they're going to investigate, and they're going to put you in jail.